Hey, Megan.
Happy Tuesday. We're here. We're
It
on
is.
time and
Hmm.
life is good. Life is good.
Yeah, beautiful day for sure. Summer is here, right? Like
Oh,
a
I
band.
love it.
I'm loving it.
I Let's do it.
Yeah, for sure.
So, you picked the topic today, and so go for it. And I'll just try to be
Yeah.
quiet.
Well, thanks. So, I deal with this a lot. We both deal with this a lot. And so it's about the issue of appraisals. And that's like this big mystery about what's that about? Who appraises the house? What do they do? Why are we paying them to do what they do? How does it all work? And so I thought we would address that today and bring you a little bit from some of the history behind some of that and why we are doing things the way we do today. Then we'll maybe finish that off with the situation that I had just recently and why these things are really important. And so with appraisers, it's important to know that the appraisal and the appraisal fee is not a lender fee. There's not a lender fee at all. It's the same as like an escrow fee or a title fee or anything else. It's a service that's provided when you're buying a home. It just so happens that the lender is the one that has to order that appraisal and include that in the loan file. So let's look at the history here a little bit. Years ago, before Dodd-Frank, 2008, I'm saying something around there, 2009, lenders used to be able to choose their own appraisers. So, if we had a transaction, I'd call John, hey, John, I got this appraisal. Here's the property address, go out and do the appraisal. That was kind of the common process. And then we had to pay the appraiser direct at that point. Well, with Dodd-Frank, if you look back at what Dodd-Frank is, well, Dodd-Frank is legislation. There were two senators that actually rewrote legislation around lending rules after the financial collapse of 2008. And so they set in all these rules in place for every lender in the country to follow, and they must follow it rigorously. These are now compliance guidelines. It's not optional. Okay, so the way that it's changed is that when we do an appraisal now, it's completely hands off. As a lender, I am not allowed to have any contact whatsoever with an appraiser. I can't call them. I can't talk to them. I can't talk about value. It's 100% hands off. And so what they've done now through Dodd-Frank, they've created what's called AMC. Well, an AMC is known as an appraisal management company. Essentially, it's a middleman that manages that appraisal process. So as a lender, we order that appraisal through the AMC. They sign that to the appraiser, and the appraiser goes out to the house. So that is the process. Okay. Now, what does the appraisal do? What does the appraiser do, I should say? And you also, who has ultimate authority over that appraisal? By the way, the appraisers are also licensed. These are not guys off the street that say, hey, I want to be an appraiser, take pictures and do fun things. They go through rigorous training and licensing to get licensed. And there's about a 2-year period if you have to be into a training program to learn how to do appraisals. So these guys are pretty knowledgeable about what they do, but they're also licensed. Now, appraisers also have to follow certain guidelines. They've got to be compliant, like we have to be compliant. And when I say compliance, I mean by Freddie and Fannie guidelines with respect to appraisal practices and standards. Okay. So the appraiser has certain rules they have to follow. I will tell you, though, from experience, that appraisers, they have no interest in bringing the value in low. Their job is not to go after the property and bring it in low. Their job is to give fair market value to that property. And there's an analysis of doing that. So, by the way, as you and I both know, on an appraisal, that appraisal report is about 40 pages. It's pretty extensive. So there's a lot of work that goes into those appraisals. So that's essentially the process these days. So when we order the appraisal, the buyer has to pay for the appraisal up front because the appraiser wants to get paid to do the work. That's simply the process. So it's not something that we as a lender control. We have no control over it, any lender for that matter. Okay. So let's talk about that value and who has ultimate responsibility for the value and the outcome of that appraisal. That responsibility 100% of the time on every transaction is at the responsibility of the underwriter, the loan underwriter. Okay. So even though an appraiser will submit an appraisal, the final authority over that value and the quality of that appraisal is underwritten by the underwriter. It's part of the underwriting loan approval process. Okay. And so there's a lot of quality control, a lot of quality standards in place there. So that way, if an appraiser misses something or if they're not compliant, it's the underwriter's job to catch that and have that appraiser correct it. Make sense?
Yeah, the
So
poor
sometimes,
underwriters. Oh my gosh.
oh yeah, they have a lot of responsibility because what happens at every step of the way. Great question, by the way, or comment, because when loans close, there's still responsibility on the lender to deliver that loan that's compliant to all the guidelines. And so what's known as post-closing audits. Okay. So when loans close, they get shipped to Freddie and Fannie, let's say, for example, and then they have their own set of auditors that will do independent reviews of those files to make sure the underwriter is compliant with all the guidelines. And they also review that appraisal. So there's a lot of QC that goes into that. So that's kind of the process. I know it seems kind of crazy, but there's a lot of checks and balances. A lot of things have to be done. But let's look at who was the final authority over that appraisal. That's going to be the underwriter. So even though the appraiser may make a comment about something or provide a comp or make a comment about comps, the underwriter will review that. And if the underwriter does not agree with it, they'll ask the appraiser to make a comment about that or explain it. Now, that doesn't happen very often. It just doesn't. I mean, appraisers are really good at what they do. I'd say probably 99% of the time, 98% of the time, we submit those appraisals back. They go through no problem. Okay. However, there's always the one-off exception. We had one recently where we submitted the appraisal. By the way, the appraiser, as we know in this case, submitted the appraisal back at full value, which was fine. And as is, they mark a box. It's either as is, no conditions, or check a box with conditions. Those conditions could be fix a broken window, fix peeling paint, whatever, a leaky faucet, whatever it is. So in this case, we submitted the appraisal back. It was as is, full value. And then when the underwriter reviewed it, he says, no, I don't think so. There was a garage door that needed to be painted. She says, I don't like this garage door, it needs to be painted. So that became another condition post-loan approval that we had to correct prior to closing. So it's important to be mindful of those things. That doesn't happen very often. It does happen, but it happened to us, of course, but that's very, very rare.
Well, you do enough business and everything will happen to you at least once.
Eventually, for sure.
I always tell people the appraisers are the eyes and the ears of the bank. They're the only representative that the bank is sending out to make sure that they're making a solid investment, because it'll be their house until you pay it off. And they're looking for major defects, or they're measuring. And appraiser has a pretty serious job, and I think that's a very very nice description of it, and so people know what kind of work goes into it, because they usually they have to find the past sales in the neighborhood. They have to fill in a bunch of paperwork and compare different aspects of the property. They drive around, they take pictures. I mean, it's like a whole thing. So
it's a lot of work. It's not simply a matter of going out to the house and taking some pictures and say, hey, thanks very much. 10 minutes, you're gone, submit a report. There's literally hours of work that go into
and
those, and
they probably
work.
I'm thinking like 4 to 6 hours per report, but then there's like the cost of doing business, because now they have to pay the appraisal management company. That's a whole thing. And
they're working for
the
less
cost
now.
of doing business, you have a license, you have insurance, you have to be you have to drive back and forth to these things. So you're not going to get rich being an appraiser, but you are going to not have to work in an office, and you could be out and about measuring things and seeing new neighborhoods. And so there you have it.
Right. Yep. It's an important function, as we know. It's a very important function, and it's there really to protect the lender, of course, but as well the buyer in some of these cases. I mean, we've had cases. I mean, if you look back prior to Dodd-Frank, when you really tightened the guidelines, you'd be surprised. The amount of appraisal fraud nationwide was staggering. I mean, staggering. Yeah. I'm talking things where there was housing tracts, for example, where they had these beautiful pictures of the homes and stuff. On post-closing audits, those homes were vacant. They were just framed.
Yeah. Oh, wow.
Hello. Yeah. There was nothing there. It was a shell of a house.
Interesting.
Yeah, stuff like that. So it's an important function. and a lot of good checks and balances there.
Perfect. Well, I appreciate your expertise, and thank you very much, Rick. That was a great topic.
Thanks, Megan. See you next week.
All right, I'll see you next week.